Happy Saturday, everybody. All in Crypto here, and welcome back, ladies and gents, for another YouTube video. This is going to be our daily cryptocurrency market update, and as it is Saturday, we are going to keep it short and sweet. It's going to be very much a technical update, and I'm going to be talking to you guys about a scenario that is very much moving up in my probability-based outcomes for Bitcoin over the next couple of weeks, could extend for a month or so, and that is a potential rally that may or may not be about to take place. So I think yesterday we looked at, over the past week, since we've really put in these lows, we spoke about a short squeeze taking place. We will talk about the yield curve in just a second because it ties into a scenario that I think may be about to take place for Bitcoin. This is all forecasting, guys. But essentially, we know what happened here with FTX. Since then, we've been somewhat consolidating and we've been very much range bound. And ultimately, you know, we've really been looking at the fact that a short squeeze and a rally was likely to ensue from here. We called the short squeeze, and the reason we called that short squeeze is because as traders, or as a trader, when the market is very short, often... first of all, you don't short support, which is what this clearly was. You know, we were calling for a bounce here anyway. And then when we saw the information flowing in that people were getting record short, for me, that's a bad indication, or a good indication for me, that I don't want to be on the side of everybody. And actually, a counter trade would have made a lot more sense, certainly with this right butt cheek, to actually go ahead and look for a long here instead of a short, because you've got proper risk reward. It's a good setup, basically, from a long perspective. You've had this candle here would have literally been shorts getting wrecked. Their risk management would have probably took them out of this high. And then we've had continuation, and we're back in this range after spilling back down to sort of that 15k zone. And where we currently are, I'm going to say we're holding it. We've said, and we said in yesterday's video, and this seems to be becoming more and more of a popular idea now I'm seeing on Twitter, that actually if you can kind of hold this, just put it on log, it's not going to make too much difference. We'll keep it on log. If you can actually hold this, you're looking at, you know, potential upside. Certainly if you start clearing here, you know, you're going to probably find some resistance here, some resistance here, some here, but potentially you could be looking at, I actually think, a retracement all the way up to here. I don't think that's out of the realms of possibility. And I think whilst the dollar's being weak, this really supports it. And certainly if the equity market has a little bit more of a rally going into the next coming weeks. And I think if we get a lower CPI print again, this will be fueled. And I think from a psychological perspective, people are still too short. The market is still very much too short here. And I think what needs to happen is we need to rerun a lot of these shorts, flip them into longs. We need to get the market bullish again, only for it to rug and for that next leg lower to take place. Now, this is small time frame. So this is hourly, 3 hourly, 4 hourly. Let's go to the weekly. Yesterday, we did a video where we were looking at an article, and they were giving 3 reasons why Bitcoin could have hit 111k next year. So in 2023, and I said, look, it's very, very unlikely. You know, there's certain things that have to take place. The reasons why they gave just didn't match. The one thing that they did say, which doesn't dictate that Bitcoin's going anywhere near 110k next year, but it does kind of indicate that a rally potentially is going to take place, and that we may see some sort of an extended push. If we're calling for and this, again, there's a lot that needs to happen here. The dollar needs to be weak. We need to see equities really support this. You know, we're calling for a run to here. Okay, so around about 17, let's call it 18k, I think you could potentially get to. Potentially, this is a scenario, but the scenario is very much moving its way. You know, we were very short here on this grind line. Okay, and potentially you still are. Here's another thing that you've got to do. Get above this grind line and hold it. So you've had one rejection off it. TA works. You've got to do something like this for this to even take place. Otherwise, you're rolling. And you take out this low, then this plan is very much invalid. But I think going back to the weekly time frame, this bullish divergence that you've had, as much as I'd like to ignore it, I don't think I can. I'm still very much on the side of the fact that markets are coming down across the board. I think we're in a recession. It's going to be a pretty bad recession. But I think actually how this recession ends and how this kind of tightening cycle ends is on some sort of a catastrophe, some sort of a black swan, some sort of a potentially doesn't have to be on the scale of March 2020, but with a similar magnitude. And I think that what the yield curve is predicting here, and the yield curve, again, ladies and gentlemen, this is the 10s and 2s for the US treasuries, for the US bond market. It's essentially predicting that we're going to have some sort of capitulation. The prior one that we had was in 2019. This obviously 6 months later led to March 2020. This predicted the financial crisis of 2008. This won the dot-com boom, and this won the crash of 1989. So I'm suggesting that we're going to have some sort of a crash or capitulation based on this yield curve, which has a 100% hit rate. Doesn't have to happen, but it seems pretty likely. And I think that what's very likely to happen is something similar to what took place over here. So given the sentiment that we're seeing, you know, people are very, very bearish. And I think what's going to happen is people are going to have to flip bullish as this market starts to take levels. Don't think you're likely to run. Remember, there's a lot that this depends on. This is just a scenario. I don't think you're going to run here. I don't think you're going to run 22K, 2250. But I can see, and this is what's going to get everybody bullish before we see this kind of a capitulation now. I can see some sort of a, you know, as they come out and they do a 50 instead of maybe a 25 or instead of a 75, or they do a 25 basis points, and, you know, the Fed's already telegraphing that they want to slow down. I think this is going to get people sort of bargain basement hunting. But I think that what's going to happen, I personally think that the economy as we know it is very much set for some sort of a real flush out, some sort of a real, you know, March 2020 event is probably the best way to sum it up. And I don't mean necessarily what took place in March 2020, but I mean an event that's going to cause that sort of a ripple through markets. This is likely when we're going to get in, because this is what's going to essentially mean the Fed are likely to pivot. But let's just focus on this bullish divergence. So first of all, what is a bullish divergence? A bullish divergence on the RSI, and we're relating the RSI here. RSI is a great tool to use. Indicators aren't the be-all and end-all, guys. But essentially, your RSI is making a concession of higher highs, higher lows, whilst you're making lower lows on your chart. So, you know, these work on big time frames, small time frames. You could see here, this was a real indication when you put in this high that this move was weak. Actually, let's talk about the dollar, and actually, whilst we're on the topic of RSI, I might as well explain it. The dollar, for example, you would have actually known that this move was potentially coming to some sort of an end, given the divergences that you were seeing here. Okay? So can you see this? This is a bearish divergence. You're putting in lower lows on your RSI, lower highs on your RSI, and higher highs on your chart. I mean, here, for example, was a good example of a kind of a false flag, if you will. So you can see you had this, you got a pullback from it, but then you've actually come up and you've actually failed or are failing to sort of break this. So this is some sort of a bearish divergence. This is what I mean with this. I think if the dollar stays a little bit weaker and takes a little bit longer to sort of come back, I think it will come back, but it's going to come back potentially. It's shown a little bit too much weakness for me. I'm still net long dollars because I think the dollars will go on and put in a new all-time high. But again, with the dollar, everybody got too confident that it was just going to keep going up forever. And this is what happens in markets. You get a slap down, people change their bias, that bias will change only for the dollar to re-emerge and things to sort of slide off the back end. So back to Bitcoin, this bullish divergence that we've had, I think I have to take seriously. And I think it's led me to sort of go, okay, well, when else have we seen these kind of divergences? Typically a bullish divergence, the higher the time frame, the more potency it has. We actually saw a divergence here. Okay, this led into March 2020. Really only here and here, and then this one sort of fell into line. So you could say that, you know, there is similarity to this. But are we potentially looking at something similar to this taking place? And then this kind of, you know, causes a maybe this taking place is what's going to usher in the next bear market. This is really a bull market. Sorry, this is really what I'm looking for, is a reason for monetary policy to change. And given what we've spoken about on the small time frames, translating to the bigger time frames with this bullish div, I think potentially you're looking at something like this. You know, you get a big slam, it finds its bottom, then you start to retrace. You retrace that move, take out all the liquidity above here and into here, and then something happens. And I think that that's very likely given what the yield curve's predicting. This has been, you know, this essentially would probably take us a little bit into next year. This is just food for thought. This is only one scenario. We've spoken about, okay, well, if you start to take out your lows and you start obviously spilling, then it's time to get short again. But I'm not really sure that I want to be shorting where we are right now in the crypto market. And I think that that's going to give a little bit of credence to people potentially going long. You know, are we potentially going to do something like this? This is kind of what I'm looking at the moment. Doesn't have to happen, you know, but is this maybe a scenario that we're going to see play out only to get that further capitulation to the downside? And then for me, I think Bitcoin's still very much looking at this. This would be a beautiful buy zone if you get this. And then we're off. And then I think what actually happens instead of what everyone's envisioning, which is this kind of, you know, and then we just basically all look at our clocks until we get to 2024, and then we can maybe get bullish again because the halving happens and the 4-year cycle theory just rinses, repeats. I don't think that's going to happen. I think in actual fact, ask yourself this question: is Bitcoin just going to stay dormant for all that time if monetary policy changes and everything else starts to rally and they start to reduce the burden of money on, reduce the volume of money that needs to go into the debt markets and allow it to flow free elsewhere? And then I think potentially, this is just all forecasting. This is, bearing in mind, at any point, this could be wrong. One thing I'm relatively confident about is you coming down to these sort of levels for Bitcoin. And of course, in my Patreon, we look at altcoins that we're going to be accumulating. But how do you get there? Do you get there when everyone's so bearish and you know, no one's willing to put that bid in? No, I think what you need to do essentially, or what the market needs to do, is it needs to get everybody bullish again. So we'd be calling for, on a far greater time scale, but we'd essentially be calling for a rally. Remember, you're holding this support. Essentially, we're calling for some sort of a, you know, maybe you get this, you lull about, you come up, and then we get a blow off. Takes all of this liquidity up here, flips everybody bullish, only for something to happen, and we get a huge slam down, and that takes us all the way down to the areas that we're talking about. Let's just look at that in terms of percentage, because it also has to make sense in terms of percentage. So, for example, if this was the largest sell-off that Bitcoin's ever seen, is what would take us here, then we kind of have to go, okay, maybe that isn't the case, or isn't going to be the case. But if we look at here to here, you know, that's nearly a 54% drop. This one, for example, was 60. This, of course, on the Luna fiasco. This, of course, is the FTX fiasco. You know, this one, for example. So it's not out of the realms of possibilities of drops that we've seen. And then with, you know, you could maybe surmise that you've had your for Ellioticians out there, they could maybe say that this is some sort of a three-wave. You know, this sell-off in March obviously was extremely brutal. Is it out of the realms of possibility is what I'm asking people. And this kind of gives a short to mid to longer term. And it all depends on what happens here. You know, is this what the yield curve's predicting potentially coming? And is this what's actually going to see the stock market essentially do this? Because this, I think, is very much still on the cards in a recession, in a tightening cycle. But rallies will occur. and they will occur and they will trick you out. And this is kind of the game that we're trying to play here. We really want to try and nail where we think this is potentially going. I mean, Bitcoin doesn't have to come this low. You know, for example, I think you get quite a lot of bidders around 12K, including myself potentially. But this is what I think you're actually probably looking at here. And how long does this take? Well, maybe we go into January, something like that. But I can definitely see the room. Now, bearing in mind, something may come out. There's lots of rumors on Bitfinex right now, lots of rumors all over the place. This is just a potential scenario to watch out for that I think is moving its way up in my forecasts. You know, we've got a array of forecasts that we sort of grant to Bitcoin and what it could do, and things we need to see for it to do it. And if we see those things, okay, then we're like a hound. We're on that trail. This is just me saying, look, this I actually think potentially is in the cards for Bitcoin. I don't think it's too far-fetched at all. And I think actually it could be quite a likely scenario given just how bearish everybody is, and this would really trick people into it. And this also lines up with me continuing to say, look, there is some sort of catastrophe coming down the road for financial markets. People say, okay, well, this one took from the first inversion 2 years for it to actually play out. You know, from the first inversion here, it took 2 years. This one again didn't take as long. The one that we had prior didn't take long at all. This was actually also caused by them upping interest rates and basically imploding the repo market. You know, we've had this yield curve and now we're deep in it. This is suggesting that something pretty major is coming. And this is all on the back end of potentially a failing financial system. And if you understand the debt markets, you'll understand why. You know, we've essentially had a 40-year bull market in the bond market and a bear market in the yield market. This has now changed. And what does that monetary change bring to the broader landscape? So this was just very technical Saturday. So hopefully this hasn't hurt too many people's heads. It's just a potential scenario I think that I may see playing out. But it depends. I mean, if the dollar starts to rip again, guys, expect downside. If the stock market capitulates, if things like gold, the UK market start to capitulate, you're going to go with it. But if we have this kind of a rest period, if we have this kind of suckers rally for Bitcoin, but this extension here for the so somewhere around 4,164 for the S&P, you know, I actually think that that's going to set us up, and this is, you know, we're going to look at an event like that taking place potentially, and it kind of lines up with a lot of other scenarios that we're running and forecasts. So hopefully you found this video interesting, some critical thinking applied to markets here. Let me know your thoughts in the comment section. Can you see something like this playing out, or do you think it's very far-fetched? Love to know your opinions on it. All I've got for you in this video, guys, if you enjoyed the content, like us, appreciate it as a comment, and I'll catch you all in the next YouTube video. Thanks a lot for watching, guys.